How's it going, everyone? It is Andre Williams, and over here we talk stocks and we focus on one thing. Always protect your profits. We also got to put in the disclaimer. I am not a financial advisor and this isn't financial advice. So just know when you do invest, you're doing it at your own risk. So today we're going to be talking about NIOs. They ended up dropping their delivery numbers today, so we're going to be getting into it. But before we get started, of course, we have to go over an agenda. If you're new to this channel, I just want to let you know we have timestamps down below in the description to make navigation easier. But if you are a shareholder or you're considering to make an investment in this stock, I suggest you watch the entire video. So the first thing we're going to be covering, yes, are those delivery numbers. And as far as what are the thoughts going through analysts' heads, we're taking a look at the potential. We're also taking a look at the factors, some of the details that NIO shared when they went over those deliveries. So we're going to be covering that first. Then secondly, we're going to be doing a technical analysis. I want to make sure that you guys are not overpaying. Even though I was saying, hey, it would be a good idea to load the boat on NIO when it's in the low 30s. For all of you who took advantage of that, my hats are off to you. But hey, I know there's some latecomers coming into this, so I want you to look out for those areas just in case it decides to pull back. And then when that is done, we're going to be taking a look at the institutional ownership. We want to know, are institutions loading up on NIO shares? And then we're going to take a look at the short interest. We want to know, what is the overall market sentiment? Is it positive for NIO or is it negative for NIO? Why does this matter? Because what this tells us is if the short interest is fairly high and it continues to creep up, if anything does happen, then there's a higher likelihood that we could look out for some pullbacks. But also on the other side of it, it does show us whether the stock has short squeeze potential. So I won't take up any more of your time. We'll go over that and then I'll give you my final thoughts. So we're going to be going over this recent article that came out today for NIO. So let's get into it. So NIO vehicle deliveries fall 5.5% in May, but the street remains bullish. So Chinese smart electric vehicle manufacturer NIO revealed its vehicle delivery numbers for May. The company delivered 6,711 vehicles, a year-over-year increase of 95.3%. However, deliveries decreased by 5.5% compared to April. So just seeing overall year-over-year an increase of 95.3%, this is substantial. This is huge. And then also taking into consideration that they're able to produce less than they did in the previous month is okay, because we're about to get into that point right now. The drop in deliveries from April was due to the adverse impacts of the volatility in the semiconductor supply and logistical issues. Despite the chip shortages faced by the global auto industry, NIO believes with its current production and delivery plan, it will be able to speed up deliveries in June and overcome the delays of May. So this is definitely good, seeing that NIO still has a strong outlook. They're saying, hey, yes, you know what? We didn't get to produce as many vehicles as we wanted to, but we're going to make up for that delay and in regards to speeding up deliveries. Additionally, NIO has reiterated its delivery guidance of 21,000 to 22,000 vehicles in Q2. As of May 2021, the total number of vehicles delivered by the company so far this year stood at 109,514. Recently, Citigroup analyst Jeff Chung upgraded NIO to buy from hold and raised the price target to $58.30 from $57.60. So this is definitely good. We're also seeing analysts on the street up in their price targets for NIO, and this gives a lot of confidence and it does help with overall investor sentiment. Let's move forward. For 2021, Chung expects new energy vehicle sales in the Chinese market of 2.52 million units, up from its previous forecast of 1.79 million units. So what does this mean? There's even more potential in regards to the Chinese market. The analyst foresees an acceleration in the Q2 order backlogs, increasing NIO's revenue visibility for H2 2021 along with market share. Chung sees NIO as a beta proxy of the new energy vehicles market. So like I was saying before, NIO is like the Tesla of China here. And the fact that they have that reputation, and they're more than just an electric vehicle company, they're trying to have themselves as a lifestyle brand. So seeing the market grow overall in general will give them the opportunity to capture even more market share. Based on 8 buys and 1 hold, consensus among analysts is that NIO is a strong buy with an average analyst price target of $60.79, applying 57.4% upside potential. Shares have dropped about 27.8% so far this year. And when I was talking about NIO and telling you guys to make sure you keep it on your radar, especially when a lot of stocks dipped, it was around that $33 range. It was in the low 30s. It has been on quite the run, now being in the $40 range. But hey, this is just something to keep in mind, and it's good to see that NIO's picking up a lot of momentum. So we're going to be doing a technical analysis for NIO. So let's see how it performed on the day. So it ended up closing at $42.34, being up 9.63% on the day. On the low, it tested $39.94, and then on the high, testing $42.44. So what we want to do, we want to see how NIO's lining up with our indicators. So now it is below the 100-day, but it's riding above the 200-day and as well as the 21-day EMA. And as you can see, NIO's looking fairly bullish. When we were talking about it, I was telling you guys it's a great time to add or to get into a position here at this $33 level, and it's been up $10 ever since. So it's definitely on a run here. So many are asking me, what are areas of resistance to actually look out for? So an area of resistance to look out for will be right around this $43 level. If it's able to pass $43, I'm going to look for that move to go to $44, and if it could pass $44, no doubt in my mind it can reclaim the 100-day here at $45.22. In regards to what are we looking for price targets, we already see with the all-time high being at just under $67. No doubt in my mind within a year, NIO should be able to revisit these areas. So keeping that in mind, this is a long-term play, and I'm going to keep on saying this, okay? We already know NIO's the Tesla of China. If we take a look at the RSI down below, yes, it is starting to look really hot, getting into that overbought territory. So if anyone that's looking to get into a position, I would just kind of wait things out and see how it goes. But of course, you could also take a dollar cost averaging approach. So what this means is you could buy on that dip or when it pulls back on the day, and that'll just be, let's say, about a quarter of your position. And then the next 3 positions that you take could be when you're taking advantage of dips. So a dip to look at would be right here, right along this 200-day, right around this $38.73 level, or just looking out for $38, or also here on the 21-day EMA around $36. But can it dip even further than that? Hey, the stock has been volatile as of late, but as far as for long term, which I'm going to always emphasize on this channel, there's a lot of upside. So these particular areas, taking everything into consideration, you're still not getting it at a bad deal. So we're on Fintel. We're going to take a look at the recent institutional ownership for NIO. So as we scroll down on the page, green rows indicate new positions, while red rows indicate closed positions. So as we take a look on June the 1st, which is today, we have Vanguard Variable Insurance Funds increasing their position. You can see they have a total of 2.6 million shares of NIO. We also have Janus Henderson Emerging Markets going in with only 191 shares, so nothing too sizable. But if we take a look at some of the institutional activity, even in regards to last week, because NIO has been running for quite some time, especially for all of last week, we can see institutions are loading up on NIO stock. Like I said, this is part of the reasons why we share this as a long-term play, because institutions are not going to be investing in stocks that they don't see any long-term potential in. If we take a look at the short interest information, and this is taken into consideration from what we saw from last week, because it says May the 28th, so close of Friday, the short volume ratio was at 28%. So that is fairly high. It is above that 21% 21% in regards to a stock having short squeeze potential. Also taking a look at the short shares availability, it stands at 10 million, and this is updated 1 minute ago, and the short borrow free rate is at 0.25%. If we take a look at the overall short volume ratio, NIO is definitely no stranger being above that 21% level, and due to the fact that it has been running up for quite some time, especially like I said all of last week, that's why I'm no surprise that the short volume ratio has been going up as well. So for my final thoughts on NIO, they definitely put out some solid delivery numbers. They were impacted by the chip shortage, but they're saying, hey, we are going to make up for it. This definitely does give a lot of good investor confidence. Also taking a look at the fact of what the analyst was saying in regards to them expanding their market share. Also having the presence that they currently have, there's definitely a big time opportunity here. You guys have heard me say this on this channel. I see NIO as the Tesla of China. So this is why this play, I want you to continue to keep it on your radar, keep your eyes on it, or get into a position. Of course, I can't tell you to go out and buy it. I'm not your financial advisor, but you already know, and the people who are already in this play, when we talked about it heavily in that $33 range, my hat's off to you. But what I'm trying to say is, even if you pay the current price of where NIO is at, we know this stock is going to get to $100 within the next 2 years. So taking into consideration the price of where it's at now, that's well over 100% upside alone. You are still beating the overall market gains, which is around 12 to 15%. So this is a long-term play here. But again, all my swing traders, again, we were talking about this. You see NIO in the low 30s. Hey, that is a good opportunity to load up. And if you want to swing and sell when it gets to the 40s or the 50s, it's up to you. A lot of these tech stocks, EV stocks got beaten down, and they got down to really good prices. So there were definitely some opportunities there. But for myself, for the most part, I see it as a long-term investment because there's so much upside, and I know NIO has a lot to offer. And also, before I end this video, I want to remind you guys, NIO is not just an EV company. They really want to frame themselves as a lifestyle brand, right? It's more than just selling cars. So keeping that in mind gives you even a bigger picture of what NIO and the direction that it's trying to go into. Hope you guys enjoyed this video, and we'll be talking real soon.